Welcome to the Stock Market Daily News Podcast, your quick 2-minute roundup for Thursday, March 20th, 2026. I'm your host, and here's what happened in yesterday's markets. Wall Street stumbled midweek as the S&P 500 closed down 1.4%, the Dow Jones dropped 1.2%, and the Nasdaq lost nearly 1.5%. Asian stocks fared worse, tumbling overnight after rising energy tensions, and oil surged above $111 a barrel on escalating Middle East conflict. From dramatic sector swings to tech surprises, here's what moved markets and what investors need to watch today. Let's kick things off with the big global headline. Asian markets plunged as attacks on natural gas plants in Qatar, Iran, and the United Arab Emirates ignited fears about long-term energy disruption. Japan's Nikkei fell nearly 3%, while South Korea's Kospi dropped more than 2%. Brent crude oil spiked over 4%, topping $112, putting further inflation pressure on major importing nations. The shockwaves rattled markets worldwide, and investors are trimming risk, bracing for more volatility. With oil 50% higher since the Gulf conflict erupted, energy stocks outperformed while industrials and travel shares struggled. Stateside, the Federal Reserve held rates steady, signaling just one cut possible in 2026. Fed Chair Jerome Powell cited continued inflation uncertainty, especially as higher energy prices threaten to drag out the battle against rising costs. Treasury yields moved higher, pushing up the US dollar and adding pressure on risk assets. Only about 15 basis points of Fed easing are priced in for this year, a sharp downshift from earlier hopes for multiple rate cuts. In corporate news, game developer Pearl Abyss cratered nearly 30% in South Korea after its highly touted video game, Crimson Desert, received solid but not spectacular reviews. The stock, which had soared more than 100% between December and March on launch hype, plummeted from 65,600 Korean won to under 46,000 on profit-taking and disappointment that reviews landed merely in the high 70s. The lesson: be careful chasing stocks at their most euphoric moments, especially around big product launches. On the innovation front, major news for digital assets. The SEC just approved Nasdaq's pilot to trade tokenized stocks alongside their traditional counterparts, opening the door for blockchain-based equities on one of the world's top exchanges. Meanwhile, ETP powerhouse Flow Traders launched 24/7 liquidity for tokenized stocks, gold, and money market funds, offering institutions a new level of risk management when traditional markets are closed. Tokenized asset markets are growing at over 40% a year, a trend investors can't ignore. Meanwhile, private credit concerns are weighing on the broader financial sector. Blue Owl and other big private lenders have seen elevated redemption requests and are selling assets to meet investor withdrawals, with shares of Blue Owl down 40% this year. This growing private credit angst has spilled into bank shares too, suggesting rising fears about risk and liquidity across Wall Street. Before we wrap, a quick check on India, where the Nifty suffered a pullback after a rally, but analysts see this as a dip worth accumulating, suggesting ETFs like the Nifty or sector names such as ONGC and Tata Power could be tactical buys as volatility remains elevated. Here's your end-of-day recap. S&P 500 down 1.4%, Dow down 1.2%, Nasdaq down nearly 1.5%. Oil jumped sharply, while gold and Bitcoin showed mixed reactions. Bitcoin hovered just above 70,000, displaying resilience to broader risk-off moves. With geopolitical shocks driving commodity prices and the Fed signaling caution, watch for more volatility as markets digest oil swings, Middle East headlines, and next week's economic data. That's it for today. Don't forget to subscribe for your daily market update and visit our website for all the latest news. Thanks for listening.